Good morning, everybody. It is the 21st of July 2009. It's 8:36 a.m. and in about 24 minutes at 9 a.m. we're going to get BOC rate decision. The rate is expected going to be at a unchanged verdict of 0.25%, as there's really no expectation for Bank of Canada to cut or hike interest rate. But the only possible market mover for this news event is going to be the accompanied statement. And if bank feels that the market is in recovery and states that in the statement, we're going to see some kind of bullish movement in the Canadian dollar. And if Bank of Canada feels that the worst is yet to come, that we're still going to see more of this recession to be continuing, then we could see some weakness in the Canadian dollar. At any rate, in the next 23 minutes, we will get that rate decision and the company statement, and we will look at the market then, see if we can get in on a trade. Some interesting technically for the US dollar cap pair is that we're coming close to a low support area of this pair, which is at the 109.40 area. And overnight we saw Canadian dollar strengthening and took out the recent support at the 110.18. Right now we're looking at just around the 110 figure, and the next support will be the 40 area. So those are going to be interesting, since the 110 is going to be a strong psychological level, and the 110.42 will be the low support of the recent lows. So I will be watching out for a reversal at this area, but in the event that these areas are being taken out, then we could see a further downward move of this pair. And especially with this news coming out, that could be the catalyst to create new lows, or we could see a strong reversal from these areas, and we should be able to get in and be able to make some money. Okay, everybody, in less than a minute we're gonna get the BOC rate decision, so stand by.
We should get the Bank of Canada rate decision shortly. Unchanged as expected from the Bank of Canada. Saying they now see Canadian economy shrinking 2.3% in 2009 versus 3% prior estimate. Sees inflation back to target in the second quarter of 2011. The higher Canadian dollar will significantly moderate growth. This is Bank of Canada. The Bank of Canada repeating its conditional pledge to hold rates through to mid 2010. Makes no mention of unconventional easing. AK Steel, AKS saying they're making 100.
Okay, so basically getting some comments out here from the statement. A little bit lower than expected expectations for the economy. Nothing special here. Very minimal market reaction. Initial market reaction for the Canadian dollar pair. Market went down from pre-release of around the 23 area. Now we're testing the figure of 110, but really not much reaction. So we're sort of testing the low of the day, and we're seeing a psychological support at 110 figure. So what we'll do is we'll wait for a little bit, at least another 5-10 minutes, and see how the market is going to react. See if we're gonna see further strengthening of the Canadian dollar. Now the recent lows of the Canadian dollar is at the 109.38 area by early June 10th. 109.50ish, 40ish area, that was the low back then. So that would be an area that we'll be looking at for the support. And if we break that area and create new lows, the next area we'll look at is obviously the 109 figure. Right now we're testing the 110. Looks like we might break it, or we might bounce back from here. So with the initial market reaction and hitting it on a support, strong support area, better if we stay out of the market for the time being. At least wait for some kind of a retracement. At this level, it's pretty difficult decision to trade because market could reverse at any time right now. This bullish sentiment could expire pretty soon, and to be jumping in at a strong support level that we're looking at the 109.50 area, and without seeing that level being taken out first, we could be just getting in to sell at the lows. So something that's definitely we don't want to do. And the best course of action is really sit out, don't take a trade, wait for the market to act normally. And if you really want to take a trade, would be a reversal trade, because as far as risk to reward ratio, if we would get in here and market bounces from this area, there's more reward to come, whereas you can just limit your risk to that 109.40 area, and if that area gets taken out, then you also close your trade. So that's the only trade that I would recommend. But at this moment, it's better to stay out of the market. US equity market opening up in 25 minutes. There's no convincing reason to jump into the market at this moment. So I will come back in a little bit when equity market opens. But for the time being, this is a no trade for the BOC rate decision. Don't see any convincing reason to jump into the market. And according to the headlines, it's more bearish for the Canadian dollar than bullish. But then we're seeing reverse reaction here. Seems traders were ready to start buying Canadian dollar. They were just waiting for the interest rate decision to get out of the way in case they get some really surprised dovish statement. But apparently it wasn't the case, so we're seeing a renewed demand for the Canadian dollar immediately. But since we can't really put our fingers on the real reason behind this move, I'd rather stay out of the market, especially with 24 minutes to go for US equity open. Is something that I'd rather stay out. And the downside potential for this trade is really not that great. We're at the 109.75 area, and about another 35 pips will be the low. So we'll have to wait to see if the market actually takes that out, or we'll be looking for an entry there for a long trade, which I think will be more likely the trade that we'll be taking. So in the meantime, we'll be looking at the 109.40 area, and if we hit that area, then we'll tentatively be the area to enter on a long trade. And we'll be very careful. We'll probably take like a 25 pip stop loss there and see if the market will bounce back from there. And at 10 a.m. we'll also get the testimony from Bernanke, and that will be another high impact news. Anyways, I'll be back. Okay, everybody, seeing some kind of stalling here at the 109.70ish area. I'm gonna go ahead and go in with a 50% trade. 109.78 will be my entry, and yeah, 109.78 got filled. Basically what I'm looking at is the break of the 110 psychological support. Even though we're still about good 30 pips away from the low, that's why we enter 50% right now. Hopefully market will bounce above the 110, maybe around the 110.20 level, and that's where I'll be taking the profit. Seeing the initial market reaction for further strengthening of the cat, basically I see no underlying reason for that to take place. I mean, I could be wrong here, but I think you just want more of those buy the rumor, sell on facts type of deal, where the market is speculating, and right after the interest rate decision, market totally went the other way. So I think we should see above the 110 pretty soon. Seeing some kind of correlation right now also with the euro, seeing some kind of correlation also with the British pound dollar, all showing signs of reversal. So if that holds true, we should see Canadian dollar, USD CAD trading above the 110, hopefully just around the market reversal time for US equity market open. So that will be our aim, and we're not going to shoot for hundreds of pips of profit. We're gonna go something around 30 to 50. So we'll see what happens in just a little bit, but in the meantime, we'll hold on to the trade. Entry 78, bid 78 right now, pretty much at our entry point. So keep a close eye on this trade. Okay, everybody, according to the entry that we did for the dollar CAD, it was at the 109.78 area. I just issued a close in the trade room right around 110.05. Right now we're according to this entry, we're up about 21 pips, but on the trade room, we're close to trade actually at 25 pips of profit. So it's not a bad trade, picking off from the bottom of the range and coming back with 25 pips in about relatively, 20-25 minutes with very little risk at all, if there's any risk, and with the possibility to really see, about the 110.25, another 25 pips from now of potential. But for the purpose of this video, I'm going to go ahead and close it, take 25 pips of profit. As you can see, enter at 78. Now it's at 03. Well, it's fluctuating, so what can you expect? Just when you want to close the trade, market goes down on you a little bit. But always, if you decide to close it, just go ahead and close it. Don't wait for that 3 pips or 4 pips. Just take your profit and close it, because it's a really bad habit if you are just waiting for that extra 1 or 2 pips. It could never come, and you can turn this profitable trade into a negative trade. So just a word of advice. For me, if I'm ready to close it, I'm ready to close it. I don't care if it's 1 pip, 2 pip, 3 pips more or less than the area I wanted to close it. So closing it at 22 pips of profit. Got it, 22 pips. It's not bad for 30 minutes of work. If you are trading a mini lot, it's not that much. It's $22. But if you're trading a standard lot, it's $220. And if you're trading more than one standard lot, you multiply that by the amount of standard lots you're trading. So it's really not bad. And if you can do this every day, it's really a great way and consistent way to make money. Okay, thank you very much.